Hi, and welcome to Top Tips Tuesday. Jeff here again from GCD Property. So this week's tip is for those considering buying and investing in property and really not sure. Heard all the articles about the rising interest rates. Sure, it's a concern, but how relevant, how's that going to affect the property price market? So I was reading an article over the weekend that was written some time ago, but it's really relevant because it was when interest rates were about what they are now, around that 5.5% to 6% range. So the article was titled, "Do Rising Interest Rates Cause Property Prices to Fall?" It was written by Simon Buckingham. So the reality is we have seen rising interest rates over the last 2 or 3 years, which we're not accustomed to. But when you look back in history, we've had times where interest rates were much, much higher and prices were still growing. So the chart on the screen now is a bit of an indication of what's happened in the historical property market in Australia. So the line in red is the interest rate, and the line in blue is the property price growth or median price. So as you can see, going back some time when interest rates were much, much higher than what they currently are, so around that 16, 17%, property prices at the time were still growing quite strongly. And as you can see with the interest rate chart there, interest rates have gone up and down over time, but the property market's been pretty steady, pretty consistent. Sure, there's years where the property market has dropped in value, hasn't grown, but if you're looking at the overall long-term trend, very strong, and whether the interest rates have been very high or historically low. So going back to the article, when interest rates were about 17% in the late 80s, and it was when the GFC came in 2008, 2009, interest rates were 10%, which is much higher than what they currently are. But we were seeing after that GFC, the government actually dropped the interest rates to try and stimulate the economy. At the time, it didn't have a big effect. Property prices didn't go up when they stimulated the lower interest rate environment. But what happens is when the economy started to recover, then we saw very strong price point growth. So again, interest rates have one effect, but it's only a small component in terms of the property values and markets. And again, if we're looking back at history, we can use that as a bit of a guide, what's going to happen in the future. So between 1990 and 1993, we saw interest rates fall from 17% down to 9%. And the Australian property market did hardly change in values, median values. So again, interest rates are one component, but it's not the only thing we could consider when we're looking at property. When we saw a sudden increase in interest rates in the year 2000, it really didn't affect the property market. And the property market, in fact, continued to climb in value after that 2000 period. So we're seeing periods in time where the interest rates have started to climb and get higher, and property prices still continue to increase in value. Personally, myself, I bought my first property in New Zealand. Interest rates were 20% at the time, but within 18 months, that property had grown quite strongly in value. So again, look at the fundamentals. If we're looking to invest in property, generally it's a long-term investment, and we should look at the long-term trends overall and factor the other things that will affect the property price market. So that's things like demand, supply demand, vacancy rates, population growth, infrastructure, unemployment rates, as well as interest rates. So that's one component. So this article really explained it very well, and showed looking back in history can give us a bit of a guide as again bringing it back to currently where we are, where interest rates around that 5 to 6%. The banks are already factoring in 3% above our actual lending rate when they're assessing us for our borrowing capacity. So when interest rates around that 2 or 3%, which was historical lows, they're factoring in that we could actually afford to pay back that 5 or 6% interest rate, which has helped protect or insulate the Australian property market. The other big takeaway point from here is it's not one Australian property market. So when you see figures and statistics on the overall Australian property market, you need to really dive a bit deeper and look at those areas where you're looking to invest. We call that the property clock. What part of the property clock are those suburbs in when you're looking to invest? As an example, Adelaide's in a very different position from what Melbourne is. Sydney's in a very different position to Brisbane. So I'm currently in the Southeast Queensland property market, and we're seeing a real shortage of property. We're seeing huge interstate migration growth, and now the international borders are starting to open as well. So we're going to see next year very strong population growth coming in from overseas, which again, we currently don't have enough property to satisfy the demand, and that supply demand is really going to have an effect on property prices. So just one thing bearing in mind when you're looking for that long-term growth and making that decision. So I hope the article's helped. You'll see the full article there, refer back to all the statistics, and good luck with your property investment decisions. Thanks.